Hello, let's cover chapter 4's lecture notes. So if you want to open up the blank notes and fill along with me, I'll do the same. So chapter 4 is the biggest chapter of all the chapters that we cover. And so you're actually going to have a project based on this chapter. And so I'll walk you through it during, I'll kind of mention it today, but also during the intro to week 3 video. It's not due till November 14th, so you've got a few weeks to work on it. And so I wanted to make sure you had enough time to work on it. There were check figures and all kinds of good stuff, so you guys will be fine. But let's go ahead and work through our chapter 4 lecture. So the notes should take you through examples of all the entries that you need to be able to do for chapter 4. So this might take a while, and so just to kind of let you know, you might need to watch this video in 2 increments potentially. But what we're going to do is we're going to look at all of the journal entries. And so this is a very heavy journal entry chapter. We're going to do journal entries. We're going to post to T accounts. We're going to do balance sheets and income statements and all kinds of stuff within this chapter. And this is for the general fund. So this chapter basically is going to take you through the general fund and then also special revenue funds. And so when we're looking at governmental funds, remember that we focus on current items, current assets, current liabilities, everything should be taken care of within this accounting cycle. And so remember, our basis of accounting is the modified accrual basis. So we're going to start off with Town of Dunn, named after one of my students that I was teaching when I was creating these notes. And so the budget for Town of Dunn authorizes expenditures of $8,360,000 and forecast revenues of $79,772. So let's go ahead and we're going to record these entries in this chapter, ignoring the subsidiaries for the most part. So remember the subsidiaries, anytime you use revenue, expenditure, estimated revenue, appropriations, you would have encumbrances, you would have a subsidiary journal that would go along with it, the subsidiary ledger, but we are not going to do that. So we're going to just go ahead and record entries without that. So let's go here. Okay, so I want to make sure there's not stuff under here. Sometimes there is. And okay, so I'll probably try to go back into your blank notes and delete those out so that you guys won't have to worry about that. And so let's start off with recording the budget. And so when you record the budget, remember that estimated revenues is a debit. And then appropriations is a credit. And so the difference then in this particular entry looks like it's going to be a credit. And so the difference between those numbers, 8360 and 7972, is 388,000. Now we know that this is going to be a credit because our debits and credits have to equal. So we have debits of 8360 and credits of 8360. Now here, your book varies on how it handles this, depending on the edition you're using. And so sometimes it uses budgetary fund balance and sometimes it just uses fund balance. And so am I doing this backwards? It says look, I put the numbers backwards. So estimated revenue is actually forecast revenue of 7,972,000. Sorry, I just noticed that and I was like, what's going on here? 8,360. Okay, so now my difference is actually a debit. Now, it does not matter if this is a debit or a credit. It can be a debit or a credit, just depending on if your revenues are more than your appropriations or your appropriations are more than your revenues. So in this particular example, we have expenditures of 8,360,000. So those are estimated expenditures, which we call appropriations, and then our revenues are the 7,972. So the difference needs to be a debit. And so you can use fund balance or you can use budgetary fund balance. It doesn't matter either way, but when you go to close that later on, you're just going to close whatever you did in your original entry. So if you use budgetary fund balance in this entry, when you go to close, you need to use budgetary fund balance. I'm just going to use fund balance. So, okay. So when we look at this, so people kind of freak out about this because they're like, well, how would you plan to bring in not enough revenue? And it depends. So it could be that we have had in the last few years an abundance of revenue and we have a little bit of extra. in the overall fund balance account. So maybe we're trying to use up some of it, because remember, we're supposed to always bring in enough money to pay the current year expenditures. And so maybe we've gotten to a point where we have some excess and we need to use it up. And so that could be what's happening. So it says referring to this budget in which appropriations exceed revenues by 388, is this an example of poor financial management? And the answer is not necessarily. So it could be because we've got too much in our unreserved fund balance account. And so we can intentionally budget a deficit to reduce that fund balance. So remember that what we're going to do is we're going to use encumbrance accounting, meaning that we record the budget with our estimated revenues and our appropriations. And then when we want to spend, we have to encumber. And then once we spend the money, then you reverse the encumbrance and you do the actual expenditure. So assume the following department, a town of Dunn, places purchase orders for supplies of 80,000 for the general government, 210 for public safety, and 130 for public works. So let's record the encumbrance along with the subsidiary. So every once in a while, I'm going to record the subsidiary ledger, but not too often. So we will every once in a while, and then we kind of stop eventually, and we do it sometimes. So just so you can see it a little bit. But on your homework problems, you don't necessarily have to do the subsidiary journal unless it tells you to. So assume the following department, a town of Dunn, places orders for supplies of 80,000 for the general government, 210 and 130. So if we add that together, we have 80, 210, and 130. So it's a total of 420. So we're going to do encumbrances and reserve for encumbrances. So sometimes your book, instead of calling it reserve for encumbrances, will call it encumbrances outstanding. I usually call it reserve for encumbrances, and that's what we did in chapter 3. So that's kind of what you're used to. And then our subsidiary, remember, will give the detail on those encumbrances. So those encumbrances, 80 is for the general government, 210 for public safety, and 130 for public works. So that will be 3 debits that total the 420. And so these will be debits: general government, public safety, and public works, just showing you the detail of what this 420 is made up of. So the next thing says we record expenditures of 432 for the goods that had been ordered in the preceding transaction. We're not going to pay for them right now. We're going to pay later. The subsidiary breakdown is 78, 220, and 134. So what we need to do is we need to reverse the encumbrance and then record the expenditure. So when you reverse the encumbrance, you'll do the exact opposite of the entry here. So we're going to debit reserve and credit encumbrances. And then we're going to go ahead and expend. Now, when we expend, we're expending 432. So a little more than what we planned. That happens. It's okay. So expenditures, and we're going to pay later. So we use vouchers payable. Vouchers payable is like accounts payable in financial accounting. We just use a voucher system for the government. So we would actually have to detail out both encumbrances and expenditures. Both of those would need a subsidiary. So in the encumbrances subsidiary for reversing the 420, that would be credits of 80, 210, and 130. So those need to be indented. So this is to reverse out our encumbrances. And then for expenditures, we actually expended 78, 220, and 134. So those are debits, 78, 220, and 134. So remember that every time we expend, we have to encumber first. And then when you actually spend the money, you reverse the encumbrance and then record the expenditure. All right, so now let's go through a bunch of different governmental entries. So remember that so far, these have all been for the fund. And so it says general fund here and general fund here. But at the government-wide level, that's the umbrella over all of the funds. We have the general fund, special revenue fund, capital projects fund, permanent fund, and all of those different funds. And so when we look at the umbrella over all of the funds, then that's called government-wide financial statements. And at the government-wide level, then what happened? So here, we're going to keep in mind that budgetary entries are always recorded at only the fund level. So our budgetary entries, and you can write that down if that helps you. Our budgetary entries are only at the fund level. You do not record budget entries for government-wide financial statements, okay? So the government-wide entries, the governmental activities do not need an entry for the budgetary entry, but they do need an entry for the actual expenditure, because at the government-wide level, you just spent $432,000. So what we need to do at the government-wide level is we need to spend $432,000. So our credit is vouchers payable for 432. And then we're going to go ahead and provide the detail of what we spend it when we spend it. Spend it is not a word. What we actually spent it on. So we're going to have 78, 220, and 134. And then those debits, instead of using expenditures, we use the word expenditures at the fund level, but at government-wide, we use the word expense. So we will say expenses dash general government, expenses dash public safety, expenses dash public works. So we will provide the detail to that. Now I'm going to go ahead and show you what that looks like in your homework. So because this is a good opportunity to kind of show this to you. So let's look at your chapter 4 homework. Let's do that one. And so for your chapter 4 homework, you're going to just answer a few questions on this tab. And then this one has entries you'll also do the subsidiaries for. And then on 424, this is the big problem. And this will be very similar, very, very similar to your project. So what I like to do is I like to do the fund entry over here and then government wide over here. So this is number 424. So I'm going to open a book to number 424. And I'm just going to pick one of the entries and do it for you just to kind of show you guys how this works. So what I do when I'm going through the entries, and that's what I'll do when I cover the homework solutions for you, is so 424, what I do is I set up the fund entry on this side, and then this is the government-wide entry. So this is the umbrella of the whole government. So if it's a budgetary entry, like this first one is a budgetary entry. It says the budget has estimated revenues of $3,140,000 and appropriations of $3,100,000. So you'll do the budgetary entry over here, but over here, it will be none because we do not do budgetary entries for government-wide, okay? So you'll do the entry just like we just did for Town of Dunn for estimated revenue and appropriations right here. Number 2 is dealing with borrowing some money. Number 3 is dealing with accruing some revenue. Number 5, number 6, payroll. So what happens is we do the entry over here for the fund, and then over here, we'll do it for the government wide. Sometimes it's identical. So sometimes you'll do the exact same entry on this side as you do over on this side, but often it will not be the same. So the entry we just did actually is number 13. So number 13 says purchase order encumbered in the amount of $1,988,040 were filled at a cost of $1,987,570, which was vouchered. So again, I'm on page 165 of your book, and I say purchase orders and contracts encumbered in the amount of $1,988,040. So that was the encumbrance. So we would reverse the encumbrance by doing reserve for encumbrances and encumbrances. And then we're going to expend expenditures and vouchers payable. Okay, so this should look exactly like the entry we just did in our notes. So this is just the syllabus. Sorry about that. Okay, so what we have is we have reserve for encumbrances. This is the amount that we encumbered, and then this is the amount we expended. So exact same concept. So in number 13 of your homework, it says purchase orders that were encumbered at $1,988,040. were filled at a cost of $1,987,570. Okay, so then what I do is I usually just copy and then paste this over here, and then at the government-wide level, figure out what the entries should be. The government-wide level does not do budgetary entries, so there's that. And then instead of expenditures, we use expenses. So wherever it says expenditures over here at the government-wide level, we use the word expenses instead. Now, if we had detail, we would do like expenses dash general government, and we might have like 3 debits: expenses dash general government, expenses dash public safety, expenses dash public works. But in this homework problem, it's not going to give you the detail of the subsidiary. So all you have to do is just say expenses instead of expenditures. So over here, if it said expenditures, change it to expenses over here. So again, what I do is I take whatever entry I did over here, bring it over here, and then fix it. No budgetary entry, change the word to expenses. Okay. So we will also do that on this problem. Over here, I've written none, and that means that there's no entries on this side until we get to number 3. So this is problem 422. So on 422, number 3 says the current year tax levy is recorded on collectibles are at 65. So we'll do that example in our notes shortly, and you'll be able to put it on both sides. Okay, back over to our notes. So now we're going to look at payroll specifically. So accounting for payroll, it says payroll accounting is similar for governmental and nonprofit entities, except that we're going to use expenditures instead of expenses. And then you're going to debit expenditures for the full amount of employee pay, and then credit cash for the amount to pay to the employees. And then we also will do expenditures for the payroll costs for the employer's share of payroll. We do not use encumbrances for reoccurring expenditures like payroll, because payroll is something that happens every 2 weeks or whatever. And so we don't need to encumber for it because we know we're going to spend the money because it's a reoccurring cost. So here's the information here for the gross pay, FICA, federal income tax withheld, and state income tax withheld. So if we were to do this entry for financial accounting, like if you were just to look and see like what these entries would look like for financial accounting, just for a refresher. So, sorry, I guess I need to make this a little bit bigger so we can see it better. So if we were doing this entry for financial accounting, you guys would remember that you would use wage expense for the gross pay, 178,000. So I'm just using general government as an example. And then we'd have FICA payable, 13,617. And then we'd have federal income tax. We usually put like even like employee federal income tax payable, because this isn't like the taxes that we pay on the business's income. It's the employee's portion of federal income tax payable. So, and then we had an employee, I know I put too many E's, state income tax payable, and that's 10,000. And so these are the withholdings on the gross pay. This is just a review of how we did it in financial accounting. And then we would do cash for the net pay. So we did that in financial accounting, and we also did that in intermediate accounting too. So for those of you that have had financial accounting and intermediate 2, you've seen this entry before, and all of you've had financial accounting. So you've seen that. It was in chapter 10, I believe. And so in chapter 10, we learned that entry. So this entry is one that it's going to be fairly similar between how we handle it, except for instead of calling it FICA payable, employee, federal income tax payable, and state income tax payable, we will name it a little different. So we'll call it due to state government and due to federal government. And then here, instead of expense, we use expenditure. So that's the difference between how we do it in financial accounting and how we do it in governmental accounting. So here, I'm going to go ahead and delete whatever's there, so I can go ahead and just type it with you. So here for the gross pay, we're going to do the 948. And so for the gross pay, we are going to use the word expenditure instead of expense. Again, if we were doing this in financial accounting, we would do wage expense, but we're just going to do expenditures. and for the total. I'm not going to do general government separately than public safety and public works with the exception of the subsidiary. So I'll do, 948. And so some of this money is going to get paid. So these are payables. These are money we owe to other entities, right? So we owe 72,522 for FICA. We owe 93,478 for federal income tax withheld. And then this 449 would go to the state government. So in real life, this money would go to the Social Security Administration. This money would go to the IRS. And this money would go to the Kansas Department of Revenue. So that's where the money would literally go. But this is both federal and then this is state. So the way that we do it in governmental accounting is we do due to. That means we've got to pay it to someone else. Due to federal government. And then we'll do due to state government. So state, we owe them 49. But for federal, I need to add these two numbers together. So I'm going to add together 72,522 and 93,478, 166,000. Okay. And then we'll have to pay out cash of whatever the net pay is. So this is the gross pay. This is the net pay, just like in financial accounting. Gross pay would go in wage expense. Net pay would go to cash. But that dollar amount then is 948 minus 166 minus 49, 733. Okay. So as far as detailing out these expenditures, we need to detail out the 948. Sometimes students are like, I'm not sure what to detail. Well, expenditures is a debit. The expenditures subsidiary will be 3 debits, and they will be for the general government, public safety, and public works. And you're detailing the 948 because that's the amount of the expenditures. So it would be 178, 480, and 290. Okay. And so at the government-wide level, remember at the government-wide level, we copy and paste it over to the other section. So looking at your homework at the government-wide level, this would be what it is at the fund level. So this isn't the right entry. It's probably maybe this one. So looking at 422, looking at number 422 right now. Number 5 is public, is the wages. And so over here, you're going to put expenditures due to federal government, due to state government, whatever. And then over here, you're going to detail out the expenditure as expenses dash general government dash public safety dash public works. And then to detail out the expenditures here, you'll have your 3 debits or whatever and a credit. And so it looks like there might be 4 in this problem. So in this particular problem, in problem 422, it looks like you have general government, public safety, public works, health and welfare, and miscellaneous. So a lot. Okay. So back over to our notes. Let's keep going. So at the government-wide level, we're going to take this exact same entry, but instead of expenditures, we're going to do expenses dash public safety, public works, whatever. So I'm going to delete what's under here. Okay. And so basically we'll do expenses instead of expenditures, but we're going to go ahead and do general government expenses dash public safety and expenses dash public works. So this is where we're doing this exact entry down here, but I'm detailing my expenditures. And so I'm going to do 178, 480, and 290. So this totals the 948. And then my credits are due to federal government, due to state government, and cash. So due to federal government will be the 166, 49, and 733. Now, I'm going to pause a minute because I want to make sure you guys understand like why we're doing the entry twice, because it feels so weird. And I remember being really disturbed by this when I took financial accounting, or not financial, but fund accounting. So as a student, when I took fund accounting, I'm like, why am I doing the same entry twice? What we're looking at is how does it affect the individual fund, but then also how does it affect the government as a whole? So this is how the individual fund, the general fund, is affected, but that does affect the entire government. So that's why you do the exact same entry, but at the fund level, we call it expenditures, and at government-wide, we call it expenses. So now we have to do the employer's share of payroll, so we have to match the FICA. So when we match the FICA, we're going to have more expenditures, and then we're going to go ahead and pay those. So we are going to match the FICA. The FICA is 72,522. And so we're just going to match that. And then just looking. We also need to record any FUTA or SUTA, but I don't think I have any FUTA or SUTA here. And so there's no mention of FUTA or SUTA, so I'm not going to worry about it. So if there was FUTA and SUTA, we would have to match that, or we would have to record that, but there is no FUTA and SUTA. So no FUTA, SUTA in this problem or in homework, okay? So we remember that in financial accounting, we had FUTA and SUTA, federal unemployment, which is 0.008 in your calculator. It's 0.8% on your first 7,000 of wages for each employee. And then SUTA is, it depends on how many people are fired. And so the rate the books usually use is about 5.4%. And again, it's only on the first $7,000 of wages for each employee. Now you don't have to worry about it in this class. And so just letting you know that we're not gonna worry about that. So we're only gonna do an expenditure based on the matching of FICA. And so just the expenditure and due to federal government based on the matching of the FICA. So the 72,522, whatever the employer withholds, the employer must match. And so then we're going to detail out that expenditure for 72,522. The detail to the 72,522 will be these 13,617, 36,720, and 22,185. So we're going to match that. And those three debits will be general government, public safety, public works. Okay, so again, this provides the detail to the expenditures. So down here, what we do is we're going to do this exact same entry. So let me go ahead and just do it manually here for you. So what I usually do is I usually will like copy and paste this, but then I realize that this is actually going to go on the bottom row. And then instead of expenditures, I'll do expenses dash general government, public safety, and public works. It's going to make me mad if this little dashed line doesn't get a little bigger. So if I hit a space there, then it will. Okay, so instead of 72,522, this is going to be each of the amounts for general safety or general government, public safety, and public works, which we are looking at the matching. So it would be these three numbers. I want them to be in the center. Oof. I get really overwhelmed by formatting when I'm doing things. If it seems weird, then I get all freaked out by it. So, okay. So now let's go ahead. And so this is just showing you guys that at the government-wide level, the only difference is we change the word expenditures to expenses instead, and then we provide the detail instead of having a subsidiary. Okay. Oh, oops. Okay. Let's go ahead and do property taxes next. And so the tax levy is the amount that's billed to your taxpayers. And so you guys might hear like mill levies and tax levies and things like that. And so basically to go through this, basically to calculate the levy, what we're trying to figure out is how much money we actually need. And so we know how much money we need, but we also know that some of our customers don't pay. So it's just like some of our customers don't pay, some of our citizens don't pay. So you guys back home, like this is interesting, but like back home, I remember like every once in a while in the newspaper, they would publish all the people who didn't pay their property taxes. And it was kind of like gossip in the newspaper where you could like look and see who didn't pay their property taxes. It's terribly weird, like that we feel the need to do that. But that's one of the things that happens within the government. And so basically, if you need a certain amount of money to work on, like to work with, You have to realize that some people won't pay. So you need to gross up the number so that you bring in enough money to actually be able to pay your bills. So revenue required divided by estimated collectible portion is the actual way we do this. Now we do this a lot in, we do it in managerial accounting. I just did it in managerial accounting this week when we were talking about like if you want profits and you have your break-even formula and you have break-even, like so to calculate break-even, it was fixed cost divided by CMPU. But if you want profit, you add it to the top part. And if you've got to give some of that profit to the government, you have to gross it up. So it's the same concept. So we need to gross up the amount based on the fact that we expect a certain number of people will not pay their bills. So assume revenue of $495 is required, but 1% of people won't pay. So what do we need to charge people so that we can have $495,000 to be able to work with? So to do the levy, what you do is you say, well, I want $495, but you divide by 1 minus the tax rate. So 1 minus the amount that you will not be able to collect. So only 99% of our money is going to be collected because 1% of people don't pay. So if you take 495,000 and you divide by 0.99, so if the number was 2%, then you do 0.98. So we actually need to charge people 500,000. So if we charge people 500,000, we just grossed up the number. So if we charge people 500,000 and then 1% of that is not paid because 1% of people, we don't know who they are, but 1% of people won't pay, then 5,000 won't pay and we'll actually have the 495 we need. So one of your homework problems will have you calculate that. So basically what we're going to do is we are going to plan, we're going to bill our customers, which are our citizens, 500,000. So let me go ahead and just write this with you. Taxes receivable dash current. That's not how you spell that word. Okay, so we're going to bill them 500,000, but that's because we expect 5,000 to not be collected. Okay, so we're going to call this estimated uncollectible taxes dash current. This is like allowance for bad debt. So it's a contra asset. So it's a contra asset and it's the amount we expect to not be able to receive. So we only actually expect revenues of 495. So this is how you record the revenue side at the government level. So this is the amount we charge the customers. We charge them 500,000, but we only actually expect to get 495. So we're actually only recording revenue at 495, the actual amount that we think will be available for this current year, modified accrual basis. So in financial accounting, we record the whole thing as revenue, and then we do an estimate for bad debt expense at the end. But with the government, we use the modified accrual basis. So we actually record it at the net amount that we actually expect to get. So we're going to record the revenue at 495 and the 5 is the amount we expect to not be able to receive. So to do this exact same entry at the government-wide level, what we would do is we would copy and paste it. Copy and paste it. And so remember in the homework, it will be side by side. So you will take the entry and paste it over here and then fix it. Okay. So go over here. I'm going to take this entry and this is an asset. Assets don't get changed. This isn't a contra asset and it doesn't get changed. But instead of expenditures, we did expenses. And instead of revenues, we're going to identify where the revenue comes from. It's general revenue. And you can actually do dash and give it some detail. So you could do like property taxes if you wanted to, but usually I just call it general revenue. If you want to put dash, you can. Okay. So this is identifying where the revenue came from. In the general fund, we know it's from general fund revenue because we're in the general fund. But here at the government-wide level, is the revenue from bond issuance, or is it from like what other kinds of places where we could get revenue? Is it a grant? Like what is it? So this is general fund revenue. Okay, so the next one says, assume by the end of the year, 450 has been collected. So this entry will be the same for government-wide in general. So when you copy and paste it over, it's identical. So you are collecting 450. And so we were waiting on this money. So this was taxes receivable dash current. Okay. So basically we were waiting to receive 450 or 500. We got 450 of it. So that means we're still waiting on another 50. So the other 50 is still receivable right now. Okay. And we haven't written anybody off yet. So we haven't done anything with the estimated uncollectible right now. So the entry to reclassify uncollected current taxes to being delinquent. So the end of the year, then we're like, man, they haven't paid yet. They haven't paid yet. So now they become delinquent. And when they become delinquent, we start charging them the interest and penalties and stuff. So what we're going to do next is we're going to take the balance in taxes receivable current, which currently I put 500 in there and then I received 450. So there's $50,000 in there. And what we have to do is we have to change it to being delinquent. So taxes receivable current has a debit balance. I had 500 and then I credited for 450. So it has a debit balance of 50. So I'm going to skip a line and credit taxes receivable dash current for 50,000 and move that to taxes receivable dash delinquent. So what this entry does is it zeroes out our taxes receivable current. So now taxes receivable current will have 0 in it because it had 500. I received 450 and I'm moving the other 50 to becoming delinquent now. But when I move the taxes receivable, I'm also going to move the estimated uncollectible to delinquent. So right now, estimated uncollectible taxes dash current has 5,000 in it, and I want it to become a debit. So to get rid of it. So I'm going to debit estimated uncollectible taxes dash current and credit estimated uncollectible taxes dash delinquent. So I'm moving that 5,000 to becoming delinquent. All right. So here I'll put move both the taxes receivable and estimated uncollectible current to being delinquent. Okay, so that's what we did in that entry. So now we're going to charge those people some penalties. So interest and penalties of 500 are accrued on the delinquent taxes, of which 10% is estimated to be uncollectible. So let's go ahead and put that in. And so now we're going to charge $500 in estimated uncollectible taxes or in interest and penalties on the taxes. So this will be interest and penalties receivable. But we don't think we're going to get 10% of it, which is 50, right? And so that means we do think we're going to get 450. So this account will be called estimated uncollectible interest and penalties. You don't have to do dash current and dash delinquent on your interest and penalties because they're all delinquent, okay? And then this will just be revenues. So at the general fund level, we did this entry to say, hey, I'm waiting on this money. Okay, I'm waiting on these interest and penalties. And so then down here, look, this account name was so long that it made it go to 2 lines, but let's go ahead and fix that. So I'm going to take this entry and I'm going to do it at the government-wide level. When I do it at the government-wide level, if it's an asset or a liability, I don't need to change it. So this is fine, but in front of the revenues, I'm going to put general revenues, and then I can put dash like interest and penalties if I wanted to. But honestly, I don't always do this. And then you could go further. Like that's what I was doing before. It's like on delinquent taxes. Like you can be a little descriptive if you want to. Later on, you'll need it when you're doing the income statement. So when you do the income statement, you're going to have to detail out. And so I'll show you. So in your homework on problem 424, you're going to do journal entries, and then you're going to do T accounts, and then you're going to do a year-end balance sheet, and then you're going to do a statement of revenues, expenditures, and changes in fund balance. And you're going to need to know which revenue was taxes versus interest and penalties, and on your expenses, if they were salaries and wages, interest, or other. So, so when you do the dash, it just helps you to be able to do this little guy. Okay, so now we're going to go ahead and write off some uncollectible taxes. So assume property taxes of 500 are written off, on which accumulated interest and penalties of 80 are written off. So again, this entry is the same on both sides, and I'll show you why when we look at it, but let's go ahead and let's do this entry. So I'm going to go ahead and delete what's here. We are writing off, people. So when we write it off, we no longer think we're going to receive it. So to start, we're going to write off the property taxes. So we were waiting on some property taxes. And so property taxes dash delinquent. And so we thought we were going to get the money, but now we're not. Okay, by the way, this is property taxes receivable. Sorry. So we were waiting to receive that money. We are not going to receive it now. So we knew this would happen. So let's scroll up to where that entry was. Okay, so when we did the entry here, like we were waiting to receive this 50,000, and now we've decided we're not going to receive it. Kind of easier to look at it when we were up here. Like when we originally charged the people the money, remember how we needed 495 to work with, but we knew some people weren't going to pay, so we had a plan for that, and we estimated it, and we divided by 0.99 to gross it up. So now what we're saying is we've found the people who aren't paying. So we're going to no longer receive the money. So we're going to credit taxes receivable, and we're going to debit the uncollectible, just debit the allowance. So just a quick refresher, just to make sure we're okay. All right, so let's go back to financial accounting and do a financial accounting review. So this was in financial accounting, and we also did it in intermediate accounting. And in financial accounting, we did it in chapter 8 of financial accounting. So it's been a while, right? So what we would do is we would say, like, make sales to customers. We'll start there. You would just record it at the gross amount, and you would do accounts receivable revenue. Man. So I'm just making up a number. So make sales to customers on account. And then at year end, estimate bad debt expense to be 1% of credit sales. So then you would do bad debt expense and allowance, and you go back to your credit sales for the whole year, and you're like 1% of that is 1,000. And then at some point you find the customers that are bad. We don't know who they are when we make sales to them, but we find a customer that's bad and say, write off customer for $120. So at that point, then we debit the allowance and we credit accounts receivable. We are no longer going to receive the 120. We decide to write it off. So you get rid of the receivable because you're not going to receive it anymore, and you debit allowance because we planned on that. So we put it in this contra asset account, and now it's just happening. So back over to here, same idea. So over here, what we're doing is we are going to debit estimated uncollectible, which is the equivalent of allowance. Dash delinquent. And then we're going to credit the receivable. So this is like accounts receivable, and this is like allowance. And then we're also going to write off some interest and penalties. So the interest and penalties, oh, wow, we only planned on $50 of interest and penalties it needed written off, and we're going to have to write off 80 of them. It's okay though. So we're going to debit estimated uncollectible interest and penalties, and credit interest and penalties receivable. Okay, so same idea for 80 and 80. So again, this is the equivalent of, so this account, like if we were to identify what kinds of accounts these are, this one is a contra asset. Let's go run out of room. Okay, so that one's a contra asset. Got a my job. There we go. This one is an asset. This one is a contra asset. And this one is an asset. So when you're wondering why the entry is the same at the general fund level and the government-wide level, these are all assets and contra assets. And so I don't need to change the word expenditure to expense. I don't need to explain my revenue. They are exactly the same. So, all right, next one, issuance of a tax anticipation note. They call them TANs, tax anticipation notes. And so it takes a while to get the money from our customers, which are our citizens. And so what we have to do is we have to wait on it. And sometimes we have to borrow money to be able to stay afloat. So revenues from property taxes are often collected 1 or 2 months out of the whole year. So we all know that our personal property taxes, like for our cars, that's actually every month. So I am a W, so I pay in November. Okay. But a customer that has a P last name pays in September. And if somebody who has a C last name, I think pays in like April, which is weird because you'd think it'd be the beginning of the year, but that's when they trailers and stuff. So anyway, so we don't get our money all through the year though for our real estate taxes. So those of you that own homes realize that we pay our real estate taxes in November and May. November and May is when I pay mine. And so based on that, if the government needs money and it's March, they're not going to get that big chunk of money until May. So they may have to do a short-term note. So assume Town of Dunn signs a 60-day, $300,000 tax anticipation note discounted at 6% annually. So what we're saying is that when they let us borrow the money, they're going to take the interest up front. That's what discounting a note means. And we learned that maybe in financial accounting, but definitely in intermediate. And so that $300,000 tax anticipation note, what we do, and I went ahead and explained it just in case you needed a refresher on what discounted notes mean. So a discounted note means the interest is calculated and withheld from the proceeds of the note. In financial accounting, we would use discount on notes payable to record the discount and then match the interest expense by amortizing the discount over the life of the loan. So in the general fund, we use the modified accrual basis. So we just take out the interest up front and call it expenditures. So with the modified accrual basis, it won't be later, it will be now. And so if the note is discounted, I equals PRT. So let's go ahead and let's just calculate it. I was just going to do it on my calculator, but so I equals PRT, it's 300,000 times a rate of 6%, but that's annually. And so we're looking at 60 days. And so it's 2 months out of 12. So the amount of the interest is $3,000. So they are going to withhold that $3,000. A discounted note means the interest is calculated and withheld from the proceeds. So instead of receiving cash of 300, we are only going to get 297. But when we repay the loan, so we can call it a tax anticipation notes payable, or you can just call it TAN payable. Okay. When we repay it, we have to pay back the full $3,000. So that $3,000, we would normally call it interest expense, right? Or we would call it discount on note payable and then amortize the discount over the 2 months. But here we're just going to put it in expenditures. And so if we copied and pasted it, I didn't. I started to get lazy. I said in the government wide, instead of debiting expenditures, you just debit expenses, dash, interest on TAN. So instead of copying and pasting it, I guess I got lazy and just said you would just copy and paste it and then change that word to expenses dash interest. And now when we repay the loan, when you repay the loan at both levels, you're just going to repay. So you're going to debit TAN payable and credit cash for 300. All right, so I think this is a good place to pause, and then I'll come back in and do the other half of the notes because I feel like this video is getting really long. But we're about halfway through chapter 4. Chapter 4 is huge. So I'm going to stop and start again. And so, but I will finish in just a few minutes. So.